Welcome to the Kingmakers podcast. Kingmakers is an elite accelerator for business buyers. We help entrepreneurs acquire their ideal business and provide them with the tools to succeed post-acquisition. I'm your host, Highland. Join us as we explore and unlock the secrets to successful business acquisition, growth, and exiting strategies. Hey guys, so if you're enjoying the podcast and you want to take the next step in your business buying journey, there's a couple different ways that you can do this. First, check out our business buying workshop. The Kingmakers workshop will give you a backstage pass to a private equity firm that acquires and operates 6+ new businesses per year. This is an opportunity for you to peek behind the curtain and understand the entire process of finding, buying, and growing an online business. The workshop is limited to a small amount of serious business buyers, so you can count on it being intimate and you can plan on spending plenty of one-on-one time with some of the best and brightest entrepreneurs in the M&A space. So go to kingmakers.co/workshop. Again, that's kingmakers.co/workshop to get more information and to apply. Second, if you are serious about buying a business, I would love to have a quick chat with you and see how we can help. Go to kingmakers.co/call, tell us a little bit more about yourself, and then you can schedule a free consultation call, and we'll see what we can do. Again, that's kingmakers.co/call. Talk to you soon. Hello, everyone, and welcome to the very first episode of the Kingmakers podcast. I'm your host, Highland from Kingmakers.co, and today on the show we have the founders of Kingmakers, Hayden Miyamoto and Deven Soni. Hayden is the founder of No Hat Digital and co-founder of Wired Investors and Media Block. He's built and scaled several seven-figure online businesses, has trained thousands of people in digital entrepreneurship, and has deep experience developing systems to scale websites. Deven is a former internet-focused venture capital investor at Goldman Sachs and Highland Capital Partners, where he helped fund several top media and software businesses. He's also the co-founder of Wired Investors and Media Block. And so together, Hayden and Deven have co-founded these two different acquisition firms. They've analyzed thousands of deals and purchased and operated 20+ businesses in the past 3 years. We're excited to have him on the show and excited to launch this podcast. And so, Hayden, I'd love to start with you, man. That's the intro we have, but please fill in some of the blanks and tell us a little bit more about your story and background.
For sure. Thanks for having me, Colin. So I started out in online entrepreneurship when I was 17 years old. I've never actually really had a real job, so to speak. I guess I've been a digital nomad living in Mexico, or splitting my time between Mexico and Toronto for the last 17 years now. Like you said, I've founded pretty much every type of online business you can think of. My sort of MO recently has been to actually bring down entrepreneurs or aspiring entrepreneurs to the small town in Mexico I live in, train them on how to sort of operate businesses and sort of keep them on as managing directors of those businesses. Originally, that was businesses I founded, and then in the last few years, it's been businesses that we've bought. Not sure you need more color than that, but.
Well, talk a tad about Vita Bravo, because I'm sure some of the people listening are curious, and some of them might end up down there one day.
It's a beautiful little town. My wife was basically raised here. It's a town of about 70,000. Lots of nature, mountains surrounding a big lake. Mainly, it's been sort of this weekend playground for the affluent in Mexico City. We moved here because we had two small children. They're now larger children, and Mexico is just a great place to raise a family. A lot of community here. There's also not a lot of English speaking people here. You could probably count them on your fingers. So I kind of got into importing friends with this business.
That's a great way to put it.
We brought probably 50 plus people down for over 3 months. People lived here, worked here, learned Spanish, made friends. And in one case, one of the founders of Wired Investors met his future wife here. So yeah, it's been definitely a different way to run businesses, but that's sort of the advantage of online is you can really operate wherever.
Yeah, for sure. And for a little bit of background, Hayden and I actually met for the first time on a podcast that I had launched back in 2016. It was the very first episode. And anyways, ended up working together, and I ended up going down to Valle de Bravo as well, heading down there in another couple weeks here, and just a beautiful place. Would highly recommend. Deven, on to you, man. I know that you've probably got your AirPods in, and you're maybe on one or two other calls at the same time right now, but would love you to add a little bit more color to your background and tell us a little bit more about your story as well, man.
For sure. Thanks for having me. No, it's a slow week, so just this call for now. But thanks again. Excited to get this started. My background is pretty different from Hayden's, and it's probably one of the reasons we kind of get along so well and kind of have really complementary skill sets. I spent most of my life living in California in the Bay Area, and ever since I was kind of in high school, sort of knew I wanted to do finance and kind of work in kind of that world. I didn't really know the nuances of it back then, and originally wanted to kind of work in investment banking and kind of fields like that. I really just kind of grew up loving to read the kind of the Wall Street Journal and that kind of stuff. When in addition to all the video games and stuff like that, but. Went to. Okay,
I was gonna say that's like your favorite pastime growing up. That's pretty unique.
Yeah, no, it was. I just love to read, and I think I kind of fell into reading a couple of finance books, and kind of just struck a chord more so than some of the other stuff. Went to UC Berkeley up here in the Bay Area for undergrad, studied finance. Got my first job, early 20s, working in investment banking and helping, kind of being a small, part of kind of a big firm that helped companies like Microsoft and Amazon and Electronic Arts and Google buy businesses that were strategic to them. So that was kind of my first experience at undergrad. Really enjoyed it, and learned a ton. Also kind of realized that one of the things I didn't love about it was that you kind of do these deals and you kind of help a company and build a really strong relationship, and then you kind of leave, right? And you kind of go on to the next thing. So, and the next client, and I really just wanted to, kind of a role where you kind of build these longer term relationships and work with people and partners for a longer period of time. So, thought that, kind of venture capital would be something to look into, and eventually got a job working at Goldman Sachs in their investing division. So a lot of people don't know, a lot of people know Goldman as, kind of traders and investment bankers, but they also have a pretty active, private equity group, which makes investments, off of their own balance sheet and from the capital of the partners of Goldman. And they invest in, everything from, bridges and tunnels to, tech startups. And I was in part of the division, based in San Francisco, that invested in technology companies. And that was everything from, semiconductor companies to software companies to media companies and everything in between. So that's kind of where I spent a couple of years. And it was kind of this really hyperactive period at Goldman. I was there from, in the mid 2000s, right when that group was really kind of growing really rapidly. So I think while I was there, I probably helped invest a little over $200 million into almost 10 deals, and learned a ton. And one of the things that kind of happened while I was there was the group started growing, and I spent time going from looking at smaller deals and spending time with the CEOs and the people that started the business, and eventually when we started looking at bigger companies, you spend much more time with the controller and the junior VP of finance and folks like that. And I think I really just liked kind of working with entrepreneurs and business builders a little more than kind of the finance the finance team of some big company. And because of that, I kind of decided to look to transition and eventually joined a smaller, slightly smaller kind of venture capital firm called Highland Capital Partners. That was a kind of firm that kind of got launched during the original .com boom in the 90s, and had funded some of those really seminal early internet companies and technology companies, and it kind of got on from there. where I spent a lot of my time was doing, some more creative deals. So buying, divisions out of public companies, or funding companies that were kind of roll-ups, meaning they one company would, their strategy for growth was to buy other businesses. That's kind of really where I learned about this space. And, it was intrigued because, I think I learned there's a lot of ways to, a lot of really inefficient businesses out there, a lot of companies that, where owners aren't really excited about, running the day-to-day business. They're kind of looking for an exit path, and was really just intrigued by that. So kind of went from there. Was there for, a period of time and helped execute a bunch of deals, but really got this kind of really real entrepreneurial itch to kind of start something, on my own. That's kind of right around the time I met Hayden, actually. Was kind of winding down for my professional career, looking at doing something else. Actually kind of joined one of his, internship programs back in the day. And right around that time, also was kind of just poking around and ended up starting a, small e-commerce business. Interestingly, that e-commerce business ended up taking off right at the time I met Hayden, so we weren't able to kind of work together more fully at that time, and that kind of company took off and kind of grew to, being very, very time consuming, and kind of got a bunch of national attention. So spent time at that business, and with a co-founder. Over time, after about 2 or 3 years of running that business, my co-founder decided to take it over, and I was kind of looking for the next thing. Got reacquainted with Hayden, and that's kind of when we started looking at buying, sort of larger, not larger, but what I call, big enough to be interesting to people, kind of
Right.
software and media companies. And we kind of did our first deal together back in, kind of late 2015, early 2016. And that's kind of how we got started with Wired.
Yeah. Love it, man. And really quick, kind of on yours and Hayden's partnership, you kind of mentioned how you met, but, how do you guys kind of work together? How do you complement each other? It'd be interesting to hear that just briefly. Personally, I'm always interested in great partnerships. I've had one for several years now, and it can really be a neat thing when done right. And of course, a lot of them, go wrong as well too. But you guys seem to have a real synergy.
I'll kick off, and I'll let Hayden chime in as well. On my end, I had what I'd probably just call a lot of theoretical and textbook driven experience, as well as a good level of background on kind of the finance and legal side of kind of just finance, and that equated to things like business ownership and kind of raising money and sort of capitalizing deals and structuring them and kind of modeling things out like that. And that's kind of where I think a lot of my skill set came from. What I didn't have any experience doing was really kind of growing a business or building a team. And those are two things that Hayden had a dramatic amount of experience in. And I'll let him add on that. But where I think I just kind of initially added value was really around some of those things, was kind of the institutional side of kind of raising capital, and kind of the legal side of kind of working with kind of law firms and things like that, which is really one of those things where until you do it, you just don't have this a lot of the knowledge base. But like anything, I guess,
Right.
And that's kind of where I feel like I chimed in. I'd love to kind of let Hayden hand the phone up to Hayden to see some of his thoughts as well.
No, absolutely. I couldn't agree more. I would just add, like, both Deven and I are very growth-oriented people, and I think we're both kind of trying to absorb as much knowledge from each other as possible. So I got really fascinated with the finance space. Having never even gone to university, it's not something that you run into normally. And Deven, likewise, is also being quite interested in learning the growth side. So I think the fact that we both love learning is one of the things that keeps us friends and partners.
Awesome. So Wired Investors, I'd love to go a little bit more into depth there. You guys started that up, it sounds like, around 2015. And what was sort of the business model there, and what was accomplished over the next few years? And that could go to either of you or both.
I'll start.
Go for it.
Yeah. So Deven and I and another co-founder at the time were looking at businesses to buy. In this space, it was very fragmented. There were a few different sort of business brokers. A lot of businesses tended to be on the much smaller side, a business you'd buy for $100,000 or less. And the multiples, you buy it for, say, 3x their earnings. And when we started looking at businesses, we were sort of looking at that size, and it just became very clear that it's the same amount of work to grow a business that's making $1 million a year as it is to grow a business making $10,000 a year. And so we just really started looking at a lot of different deals, and eventually a friend of mine who I've also been on a lot of his podcasts, Spencer Hawes, was interested in selling his business. And it was a business I had a lot of experience in, so we decided we would run with it. We had some great success quite early, and we sort of looked at scaling the thing. Do you have anything to add to that, Deven?
Sure. So, no, I think that was exactly right. We realized really quickly that there was, a lot of activity, and I kind of cut my teeth on, looking at, business to buy on sites like Flippa, where, people were selling, business sites, if you call them at that stage, for $10,000 or something like that. And I actually kind of picked up a couple as a hobby and kind of poked around with them, and bought the Idiot's Guide to WordPress like back in the day, and figured out how to operate the thing. And you realize really quickly that it's the exact same amount of work to buy a business that's 100 times bigger, but you actually have more kind of ability to invest in growth, invest in team. And you almost have these kind of tailwinds that make just life easier in general. So that's kind of, where we got started. We kind of bought a business that was, a pretty good scale through Spencer, that it was also kind of well known. Because we bought that business and it was sort of well known, we ended up, learning a lot, meeting a lot of people that were interested in investing in deals like this, meeting a lot of people that were interested in selling deals like this. So the flywheel got spinning, probably a little quicker than I would have anticipated anyways. And basically we end up seeing, a lot more really high quality deal flow, seeing a lot of interest of capital partners, and really just kind of put the two together and kind of went after the races.
And so then from, about 2015 to now, I guess you'd mentioned it really kind of took off. Go over really briefly what was kind of accomplished. At one point, I think that you guys were acquiring a business every, was it, every quarter or even more than that?
Actually, I think the pace at our peak pace, which was probably kind of, late 2016, early 2017, we were buying almost a business a month. And, we had a sourcing team of 3 people that were, kind of scouring the internet, looking for deal flow. We had kind of built these systems to, due diligence, built a, really strong process to onboard and kind of build growth plans and actually execute. And it was, a pretty exciting time because, it was, there's a lot of opportunity. We were meeting a lot of interesting people in the space and building, what we think is probably one of the biggest firms in kind of the space, really quickly and organically. So that, that was, super interesting. I think over the period of, 2015 to kind of late 2017, we probably ended up buying, nearly 20 companies. And we still operate, kind of most of those today. So it's, certainly been super rewarding to kind of just make all those, learnings and mistakes much more quickly. I think a lot of people that kind of do these acquisitions or buy companies, will do one, maybe they'll do one a quarter, one a year. And, one a quarter is probably really, really active, even in kind of these large, kind of venture capital environments. So the fact that we were on such a fast pace, I think just really accelerated our learning. So, I think we made our mistakes quicker. We made our identified our wins quicker, and just iterated much more efficiently, and it's kind of to where we are today.
Yeah, for real, man. And I do want to go into kind of the genesis of Kingmakers then, and how that sort of came about from your partnership and from Wired. But you had mentioned mistakes, and I know, and I've talked to both of you a little bit more about Wired and that sort of period, and you both sort of describe it as this time when you really you decided to really cut your teeth and jump in and really immerse yourself in it and essentially make and learn from as many mistakes as possible. And I'd be curious if you want to touch briefly on what you think some of the most valuable, mistakes you made were in this space, or maybe the most.
I'll let Hayden start, and then I'll kind of fill in the gaps.
Sure. Yeah, I mean, we move very fast. Move fast and break things. And honestly, I think my motivation at the time was actually just to move fast, get a large gamut of experience in the space, and then sort of figure out, learn from those mistakes and figure out what our best sort of investment thesis would be. So we bought all sorts of businesses. We bought a lot of sort of media publisher businesses. We bought SaaS businesses. We bought product services. We bought a service company. We bought a lot of businesses. And I would say, that was, one of the first mistakes that we learned from, which was just sort of figure out exactly what our bread and butter was. And it took us probably about 8 businesses in or so to figure out exactly what that was. The other large learning, and Deven can attest to this from his experience in venture capital, is just how important diligence is, and how important it is to get right and create, just this bulletproof process.
Mm-hmm.
And that also, it took some time, but I would say sort of a year in, diligence and deal flow they were really our strengths.
And I'd actually love to go a little bit more into depth there, because I think a lot of the people listening are listening because they are interested in continuing to acquire businesses, or to acquire one in the future, or even just to manage and continue to scale one, which we'll have episodes on that coming down the pipeline here. But deal flow and diligence, I know that through this process you guys have developed quite the proprietary system, and I don't feel like it's something. Especially as I've started to work with you guys, it is very clear how critical those systems and processes are, just like you had mentioned. And so I'd love for you guys to touch a little bit more on, and maybe just do kind of a broad overview of the deal flow and diligence process. Because it's one thing to just say those words, it's another to really understand the level of work that goes into that process, and kind of the result that you can get at the end of it.
Sure, I'll start, and it's a really good question. It's one of those things where you kind of it's one of these things where you can kind of just start doing without knowing anything, and kind of feel like you're doing like an adequate job, right? Because all it is really on the diligence side, especially, just asking questions, right? It's like, oh, I don't ask questions, right? But I think as you kind of start learning more about these businesses, kind of seeing things that have kind of gone wrong, things that you may have missed in various deals, you kind of start really figuring out what the questions that matter are, and how to kind of stage them as well, such as to not, because there's also an innately like personal relationship building component to this. So, you can't just, propose to someone on the first date, and you can't ask them, how many people they've hooked up with since high school or whatever, like on the first date, right? So it's really kind of this nuanced thing as well. So, to take one step back into sourcing, I think sourcing, what we really did a really good job of is taking what is inherently a very, very time-consuming manual process and adding, a good level of automation to it. And some of that automation is, softwares and tools based, and some of that automation is just, using systems such that you don't have to do the work yourself. And it's, really part of that was, us knowing a lot of the external tools that existed, building tools when tools didn't exist, and then kind of constantly refining that. And the biggest part actually ended up even being just kind of figuring out the types of, ways to reach out to people. Is, LinkedIn better than email? If you're doing email, what's the right headline? All those things, can dramatically increase the responsiveness of people that are business owners, and kind of give you just a larger set of potential targets and companies to work with. On the diligence side, I think we really categorize it into a couple areas. One is, kind of financial, meaning are the things that are being, actually, I'll take a step back. One is really just knowing what types of things you really want to ask for in terms of the materials that you want to use to evaluate the business. Things like, old contracts and, kind of financial statements and, historical transactions and analytics access and all these things that you just know that you should ask for, because, people aren't going to divulge information they don't ask for. So, making sure that have that complete list. Secondly, it's, what are the things to be looking for that really matter? What are the key kind of risk factors in the business? What's the, customer concentration? What's the traffic concentration? What are the key things that are actually driving revenue? That kind of stuff, and then the third tier, I think really is probably the hardest and the hardest to get right. It is really kind of a lot of these, as I alluded to, kind of these personal issues, which is, what are the team members actually doing? How much time is the owner really spending in the business? Are they the chief sales, kind of driver, lead generator for the business? How hard is it to replace these people? Like, how motivated are the folks that are around? All those types of things are really, really tough to get right. And, I think it's very nuanced, but it's something that over, the probably 100 deals we've sort of initiated with, we've kind of gotten better at.
Anything to add to that, Hayden?
I mean, I think there's a lot to add to that. But as a high level overview, I would just say that a lot of people, their exposure to business buying is really based on what exists in these online brokerages. And the fact of the matter is, like, I would say, if we looked at the deal flow available from those brokerages and sort of looked at our diligence systems, we may be able to buy one or two businesses a year, and we're competing with dozens of other buyers. So it is really important to have a sourcing process, because we may initiate conversations over the course of a year with 50,000 people in order to buy 20 businesses. And it is a numbers game. You definitely want to get at least three LOIs out to buy one business, and to get those LOIs out, you definitely want to probably be looking at least 30 to 50 businesses in some cases. So I just really want to hammer that down, that the two really go hand in hand.
Right. And Deven kind of made a good point, which is that you can start doing deal flow and asking those questions and kind of figure out a decent set of information to ask for, or places to find a business to buy. But again, I think you guys have sure refined the process over the last several years, and having just analyzed thousands of deals, I can personally attest it is quite the system that we have down now. But Hayden, you'd kind of mentioned about different online brokerages, and I don't know, some people listening may be wondering, I guess, where do these websites to buy exist, and why are founders selling them, or what are the typical reasons that we see that happening? Can you speak a little bit to that?
Yeah, so we're sort of in this new era of businesses built on top of online platforms. So like businesses built on top of search engine rankings or Facebook traffic, and a lot of these businesses, I would say, they were started by one or two people. They've never been venture funded, and I would almost say that these people kind of just lucked into the business, and because of that, the business really became what I would call a lifestyle business, right? So a lot of these people are traveling the world and making maybe $20,000-$30,000 a month and just living really happily, but they're not really business people, right? So a lot is being left on the table because there's no prior funding, and because they're generally individuals. The prospect of selling the business and having $1 million plus in the bank is very, very appealing to these people, because that can be a life-changing amount of money. So that's why they sell.
And you'd kind of mentioned that a lot of these people, they may be entrepreneurial, they may be take these risks and maybe luck out, build a decent business, but they don't necessarily know how to continue to run that business or scale it. And so I'd be curious to hear, what are the types of things that you guys do to an online business that hasn't already been done by the founder, that can significantly generate that growth and higher valuations of the asset?
So one thing, one thing in common with pretty much every business is conversion rate optimization. Nobody does it. Everybody should. It doesn't matter what the business is, just doing sort of A/B split tests, even doing initial usability tests to make sure that the site is optimally designed. we can generally count on getting a 30 to 50% lift on any business that we buy. And of all the businesses we've looked at, I've literally never seen one that has actually said, yes, I've done pricing testing on, some kind of SaaS offering, or one that on my top traffic pages, like I A/B split every month, right? Not a single one. So that's one thing we do. What I wanted to sort of add a little bit more color on before on the diligence side is that the diligence is very, very different depending on the type of business you're buying. A publisher is very different than a SaaS business. What we found with Wired was that publishers was at least Wired's bread and butter. And, so some of the things that we would do is whenever we buy a business, we have a growth plan. That growth plan includes ways to grow the business, but also ways to mitigate risk. The diligence process is also, really highlighted around how what are sort of the risks? Are there certain pages that have, a very large percent of traffic, and if they lost their rankings, the business would drop, its revenue by half, that type of thing. So on content businesses, a lot of that is just, okay, can we publish more content cheaper? Are they taking advantage of Google News? Are they taking advantage of, Quora and Reddit? Are they, doing keyword research well? Most people aren't. Can we drive content costs down, or are they all Californian writers? So those are all sort of things we'll look in on a publisher side, but also on the monetization of that traffic that they're generating. The most basic thing possible is, can we just negotiate a better rate with the affiliate or advertising network that they're using? And 9 times out of 10 we can, and 9 times out of 10 they haven't. The seller has never tried to.
And I know you often talk about bags of tricks, and you kind of alluded to a couple. But what are some of the other tricks that you can kind of throw? I know for instance, cross-selling is one. What are some others?
So if we're looking at just a single business and not sort of creating a portfolio, but just a single business, I would say if it's getting a lot of traffic from Google, there's a lot of search engine optimization that I have got sort of a lot of experience in terms of like click-through rate optimization by going through webmaster tools and optimizing titles. We link build at scale better than a lot of large agencies. So that's sort of another side to it. But yeah, I would say a large part of the publisher side is SEO.
Right. And you'd mentioned portfolio. It'd be interesting to talk about that a little bit, and Deven alluded to it a little bit earlier. The difference between buying just a single business or creating a portfolio, which, obviously you'd probably start with a single business, but then, keep attaching other businesses to that. What are kind of what are the advantages there, I guess, for people listening? Why would they want to do that? So
you had alluded to it before. Cross-selling is a large piece. So when you approach a business like a portfolio, it's the question you have to ask yourself is if I buy this business and I just sort of cross-sell to the other business or businesses in my portfolio, can I grow it by X%, right? And that's sort of where having an actual thesis makes a lot of sense. So with Wired, we ended up creating sort of two portfolios, two roll-up portfolios. One was in sort of the marketing tool space, and the other was in the pet space. But yeah, cross-selling is a large piece of it. If you buy a publisher, can you then sell a digital product? When you're now selling a digital product, you're monetizing better. Can you sell a course? Is there room for FBA and physical products? It can all combine, and then at some point, can you sort of brand everything together, unify it, and essentially put it all under one name, such that if you were to exit it, can you then open up like a new buyer universe and sell for a higher multiple, which Deven had to.
Yeah, Deven, I'd love you to touch on that a little bit, the kind of the multiple arbitrage concept.
Absolutely. So, I think one of the really fascinating things about this space is that the area that we kind of like to spend a lot of time is there's kind of a bit of a gap in the market. The deals that we have generally acquired on our own are ones that are too large for individuals, meaning people that had kind of dig up cash in their checking account or their couch cushion or whatever, but also too small for most institutional buyers that have raised external capital. And what that means is there's a real gap in the market, and because of that gap in the market, kind of valuations are lower than what they would be for a business that was just a little bit bigger. As an example, companies with under with $1 to $1.5 million of annual earnings, which for any kind of individual is a pretty good kind of living, but still it's many even small cap private equity firms only look for firms companies with like $2 million earnings or $5 million earnings. So banks are the same way. So what can happen is that companies that are just a little bit smaller might trade for 2.5 or 3 times earnings, and the seller may not have a lot of options to sell the business, meaning there's less demand, so the price can go down. But if you do some of the things that Hayden mentioned and kind of tweak the business or buy 2 or 3 related businesses and put them together, you might be able to sell the combined portfolio for something that you buy for 2.5 or 3 times earnings, you might be able to sell for kind of 6 times earnings or something like that, right? And that's just just blocking, tackling, kind of growing, and it's not that complicated, and you just kind of really open up to a different buyer universe, right? It's like house flipping, right? If you see a lot of homes that are kind of 3-bedroom, 1-bath somewhere, and everyone wants a 3-bedroom, 2-bath home, you take some square footage from the dining room that no one uses and turn it into a bathroom, and people are just willing to pay more for not a lot of work. And I think it's kind of similar in the business buying world. They're just certain people, they have certain preferences, and when you find a preference a lot of people have, which is deal size, you just get a lot more competition, and the prices tend to go up.
Yeah, love it. And this again would be to you, Deven. Some listening might be thinking, how do I acquire a business for $1.5 to $3 million? Obviously, you're not paying for that all out of pocket, and wouldn't recommend that either. But can you give kind of an overview of some of the ways these deals can be structured?
Sure. So there's a lot of things you can do, and there's a bit of a continuum from what I'd probably call the easiest, most attractive source, and then the kind of least attractive source of capital, and that also just goes by kind of the interest rate and the cost of capital, right? Some types of capital you pay a lot more for, some you pay a lot less for. Obviously, the easiest thing to use to buy cash, and you wouldn't recommend it for 100% of the business, but there's always a component of it is just paying cash right out of your bank account, generally you can do that as much as you like. We don't typically see a lot of people putting kind of more than 60 or 70% of the purchase price in cash. Sometimes you can do a lot less if you use some of the things I'll mention later. But oftentimes people will do a deal that's 60 or 70% cash, and then the rest you can kind of figure stuff out. One other tool that's really common with deals of this size is seller financing, meaning the actual seller will take less of the money up front, and you can go ahead and actually get a loan from the seller themselves to buy the business, or do some sort of an earn out, meaning there's certain metrics that need to be hit in the business for the funds, for you need to pay those funds. So, for example, if a company's been making $100,000 a month, every month for the last 2 years, and you want to buy it for, I don't know, $3 million, you could say that, I'll give you $2 million in cash now. That $1 million, I'll pay you, $50,000 a month, as long as the business actually earns $100,000 in revenue or something like that, right? So that way, the seller is taking some of the risk. They're more motivated to, kind of help you with the business or be responsive if there's issues. So that's always a really nice thing to use. And I think we've used some form of seller financing for the vast majority, probably 70% of deals we've done. The downside is, they'll probably want more money, right? Cash is king, and you can pay less if you do all cash, but it's not something we recommend. There's also, several kind of bank financing options that are really attractive. Depending on your personal situation, if you have, kind of good credit or good collateral, using tools like the SBA in the U.S. or there's an equivalent in Canada and places like that as well. But using sort of bank financing that's kind of government guaranteed to buy these businesses. Usually the length of the loans are pretty solid. Like you can generally borrow for 5 to 7, sometimes up to 10 years. Interest rates are in these days sort of probably close to 8%. Who knows what they'll be at the time of publishing? But generally speaking, the really nice thing is they'll also kind of often lend a large percent of the purchase price, often, up to 80%, often even occasionally, sometimes even a little bit more. So that's, really can be really appealing if you don't have a lot of down payment and you want to kind of buy a bigger business. The one kind of downside of some of these types of financing is they may require some form of personal guarantee, meaning if, the loan's not paid back, it's not and the business can't pay it back, then you as the borrower may be on the hook for that payment. But it certainly offers a form of leverage, and we're still big fans of that type of financing. On top of that,
Hey guys, so I just wanted to interject for a second here. If you didn't connect the dots, when Deven is talking about bank loans at 8% interest rates amortized over 5 to 7 years, what's important to understand is that if you structure a low multiple deal correctly, you can put in just 10% of the purchase price and actually get your money back in about a year. And I just think that's really crucial for people to understand, since most people might think like, oh man, not only do I have to allocate all this cash to a down payment, but it's going to be tied up in the business for years. And that's just not the case if you do it right. By buying the business at a competitive multiple and using the right financing and structuring the deal correctly, you can get your initial investment back into your pocket in like 12 months. And so again, just think that's really important to highlight here. And with that, we'll go back to Deven as he continues to talk about different ways of financing a deal.
We're still big fans of that type of financing. On top of that, there's, external investors, and those are, kind of debt investors, meaning people that want to, lend money at a stable return. So often people that are, kind of just want an income stream. They may have a bunch of money in the bank, and instead of earning 2% on their checking account, maybe they'll, lend to you and earn, 10% or 12% a year or something like that. And they'll be kind of senior, meaning, let's say you borrow, 20% of the business using some sort of debt financing from external parties. That means that, let's say, another $1 million business, you borrow $200,000 at 10% interest. The interest rate is, is going to be something like, $20,000 to just, $40,000 a month. That's kind of senior, meaning if you can't pay that back, then you basically, the lender can default on the business, but like the odds of your business kind of declining, that much are pretty low. So it's pretty low risk, right? It's still risky, and that's why you kind of pay the return you do, but it's a lower risk. The last thing I'll touch on is just kind of investor equity, and this is kind of what you'd expect. Someone actually just buys a percentage of the business, and the benefit here is it's not like you're obligated to pay that back. If there's a quarter or a year where the business doesn't make money, tough luck. That person is not getting a payment or distributions, or if the business shuts down, they're not getting anything. But the upside is if it does really well, or kind of continues to perform, they get percentage of the profits and percentage of the equity value based on what they've invested. So that's kind of the continuum. Obviously, seller financing is usually the easiest to get. Super common in almost every deal, and it kind of goes down the spectrum to things that are maybe a little more expensive.
And just one thing to add, in terms of forms of seller financing, which sometimes people will call also holdbacks, you can make them contingent. So a large part of our diligence process, like I mentioned before, is about identifying risks. And if there is a larger risk on a business, we may very well put a percentage of the business, let's say 30% of the business, as holdback payments. But those payments are based on essentially that risk not actually seeing itself happen. So that's and in many cases we'll just say like we won't buy the business if we don't have this contingent holdback, right? So yeah, just wanted to add some color to that.
Well, and something else you may add some color to as well that I know is kind of along the lines of risk mitigation would be, warrants for purchasing portions of the business. You want to speak to that really quick?
Sure. So one thing we did with our last roll up venture is we structured our deals to buy a minority in businesses and then have a warrant for a year to purchase the rest of it. So it gives us, it really diversifies risks. It diversifies risk in the business. It diversifies risk in the partner in case the partner we're working with, it's just not a good fit for whatever reason. And in a couple cases, we also didn't even buy any of the business. We just literally bought a warrant. We just said, hey, we'll pay you, X dollars in order to have a warrant for 6 months. And that gives us, time for us to sort of play with the business, grow it a bit, and we can strike on that option, only if it sort of checks all the boxes for us.
So are you typically able to do that and actually gain access to the business and operate it? Is that what you're meaning?
So we're not necessarily operating, but there are things we basically apply our bag of tricks, and that's part of the benefit to the seller in terms of allowing us to put this option in. So they'll get a lump sum of money, but at the same time, we're also going to say, add a bunch of content, add a bunch of backlinks, help with some conversion rate optimization, and grow the business. And so that warrant is not, the strike price is not defined necessarily as a set dollar amount, but rather a set multiple. And the idea is that, we're helping grow the business and then effectively buying it for more.
Right. Win-win. Love it. Yeah. So long story short, there's a ton of different ways to structure a deal. It sort of seems like it's limited by your own creativity. One other thing I want to touch on is what type of person do you think is ideally positioned to purchase an online business?
That's a great question. It's one of those skills that, I really do think can be learned over time, and probably a good example of that. But, we've really seen two types of people that are really interested. One are people that are kind of more entrepreneurial by nature, meaning people that have kind of traditionally started businesses and, know how hard it is, especially during that kind of, kickoff period of a year or two or three where you just kind of not having a lot of revenue, you need to kind of spend a bunch of money and spend a bunch of time. You don't have a lot of data or traffic to, kind of optimize your business from. And people have done that and maybe succeeded with that, but now are kind of ready to shortcut that process and buy a business so that you can kind of start improving something that already has some legs. The other, I would say, are folks, and we see a lot of these people, and I think they over time can become really good business owners, are people that may have had more of a traditional career, or for many years have, some savings and are kind of, burned out with, or just kind of not as excited about the career path they were on, want something a little more independent, don't want to go from, being at a point where you have a stable job and income and things like that to start from zero to start your own business again, but really do you want to start something from that has some history, some clients, maybe a bit more forgiving because of that, right? May provide some more financial stability because of that, and those that there, I think there's a lot of a work that kind of needs to be put in at the outset to learn how to kind of operate people, how to operate a business day to day, how to kind of manage and motivate people, some of the technical side of, kind of the marketing and growth and sort of just managing things. But I think the types of folks often do become really good operators over time. It just takes some time.
That's great. So we'll start wrapping it up, guys. But I'd love to talk about Kingmakers and kind of its genesis. So let's go into that for a sec.
Sure. I'll kind of kick off and you can kind of fill in some gaps. But, after us, evaluating, high hundreds, if not thousands of businesses buying, almost 20, I think we've gotten really, really good at, kind of the front end of doing that, kind of the sourcing, the diligence, the onboarding. And, we think that those are things that just end up being really hard and challenging. And, we've kind of done that work up front. And we really want to kind of share the benefit of that with other people that may want to buy a business. We're big fans of kind of sourcing deals versus kind of using the outside brokers sometimes, just because they can be so competitive, and you don't always find exactly what you're looking for. So what we wanted to do is provide a service where we work with kind of partners to actually kind of almost create like an accelerator to accelerate their path from wanting to buy a business, maybe thinking about it for a while, maybe looking at some listings, to actually being really confident in operating a business, finding the right business for them, onboarding that business to reduce the risk, and then kind of providing a level of kind of guidance and support post acquisition. The other thing I'll add is our goal here really is that we love this asset class. We're very long, kind of small business, and what we've also realized is it's just really hard for us to own like all the businesses, right? Like you can't like buy everything, you can't make all the money. So
Bummer.
right. So for us, it's like let's do what we're good at, and basically work with people at what they're good at and let them be really motivated to kind of run businesses that we can also invest in, help with, and jointly succeed together. So that's kind of the genesis of Kingmakers, and I think what that really means to us is just having a partner to kind of provide the extra level of confidence in this process, which is kind of pretty uncertain. It can be a much bigger endeavor and a much more expensive endeavor than buying a home. Yet there's what I'd probably say many fewer resources available, and much smaller of a peer set and a support network. So we really want to do is just kind of build a lot of that infrastructure to make it easier for people to kind of take that leap to kind of buying a business.
Now, I do want to come back to Hayden and have him touch on Kingmakers too, but you did mention something, and I want to go back and touch on this really quick before we do end, which is online business. Like, obviously, a lot of these sort of concepts can apply to online and offline business, and different sizes of businesses. But like, what's so compelling about this particular type of asset to you? I guess, like, why are you excited about it? Why should other people be excited about it?
Absolutely. So it's a really personal reason for me, but I think it's also kind of practical, which is, when you're looking at an online kind of company, it's often one that can be run from anywhere, meaning you don't have to, buying let's say you choose to buy a laundromat instead, right? It might be just as profitable, the same valuation, might even be lower risk, but if the only laundromat available is for sale in, kind of Omaha or something, you may not want to move to Omaha and run it. Whereas, with the majority of, online businesses that are kind of software based or content based, you can kind of run them from anywhere. There's a host of experienced staff and operators and providers and agencies you can hire globally to help operate and manage the business. It's also a little more scalable. If you want to, let's take that kind of analogy further, right? Let's say you want to, become the Warren Buffett of laundromats, right? Like you can find one in Omaha, and the next one, you kind of need to find it nearby. Otherwise, you don't really get the benefit of scale. Whereas, with the online side, again, you can kind of scale that portfolio much more efficiently because you can kind of relocate everything. And that doesn't mean you can't start an office in your, kind of your hometown, but the nice thing is you can really just do it from anywhere. And you also kind of get to scale, kind of globally. You're probably not going to get a lot of customers from California for your laundry in Omaha, whereas you may get, customers for your software tool from, California or Argentina or wherever else, right? So you kind of have this global customer base. So you really just have a lot more, scale. This business is going to get much bigger as well.
I love it. Hayden, anything to add to that?
All I'll add to that is a lot of people get into these online businesses in the first place. They start them in the first place because it's so much easier to passively own them. And I would say for sure, if we had bought 20 local businesses, we definitely would have been drawn into the day-to-day operations. Whereas with these online businesses, it really is easy to become like a passive owner, and let the business work for you. And that's something that has always attracted me about the space. So it's not only the scale, but how easy it is to become a passive participant in the business.
Business working for you instead of you working for it. I love that. And then Hayden, anything else to add to what Deven was talking about with Kingmakers?
I think you definitely hit the nail on the head. I liked to think of us as an accelerator for people who want to buy businesses, and our long-term goal is to also be, an equity participant in those businesses.
Awesome. And so last question to each of you, is there any parting advice that you'd have for any listeners just interested in getting into this space?
I'll do one. It's a little bit self-serving. I think it's really true, which is, I think a lot of times people are kind of stalled in this process because of two things. One, they go to some of these sites, these platforms where these deals are listed and don't find something that's exactly for them. Or two, they just kind of find it very overwhelming. I think, for me, coming from, a really non-operational background, it took some time, but it's certainly one of those things I was really able to kind of get my hands around pretty efficiently. And secondly, there's just a giant world of businesses out there beyond the ones you see on, advertised or on kind of, brokerage sites and things like that. So, I think certainly kind of think outside the box with how to find a business, and you'll probably find something that's a better fit for you, that actually may be a better value as well.
Yeah, I would say if you're looking to buy your first business and you don't have a ton of experience in running online businesses, probably look for the simplest business model possible. So don't jump into trying to run a SaaS business or even a service company, but I would recommend like a publisher or an FBA business. They're quite easy to learn, and start as simple as possible.
Fantastic. Well, folks, you are the average of the 5 people you hang around the most, and today you've been hanging out with Hayden, Deven, and Kylan, learning how to build your business empire. For more information or to get in touch, head over to kingmakers.co, and always remember to build beyond business.